crude oil, I can trade gold, all these different things. But why do I trade it? How do I trade it? Where do I buy it? Where do I sell it? What actually goes on here? And I want to dig into one of your trades. That makes sense, right?
Yeah, let's do it.
Anatomy of Katie's futures trades. Let's start with just like I want to start with the whole trade, which was a profitable trade that you had in small technology. Started on 11.5, ended on 11.8. The 6th and the 7th actually were Saturday and Sunday, so the markets weren't even open. So this was essentially like a 24-hour trade in small technology. Why don't you give people like the broad points of this little trade that I've highlighted here in the chart in the small technology futures?
Yeah, well, a couple of things. So, as I've probably harped on for the last 11 months now, one of my resolutions for 2021, just about to say 2020, wow. It's weird because we've been inside for 2 years.
And it's also almost 2022. Like if you're just getting good on the 2021 thing, I'm sorry to say it's going to change again. It changes every 365 days. Yeah.
I know. Yeah. So one of my goals for the year was to just start to incorporate more short-term trades into my portfolio and do it in a way where I could still, like you said, juggle my other tasks, be able to control my size and my risk. So that's kind of the backstory of me trying to make this a priority when when I do have 5 minutes to look at my portfolio. So with this particular one, there was a couple of other extenuating, I'll call them circumstances for the account. So for those that did not know, I foolishly followed Mikey into a short naked put in Peloton. So if you were asleep for the last 2 weeks or so, Peloton had a massive move. It basically got chopped in half, big haircut. Wow. So that was kind of my most urgent trade I was trying to triage. But that said, with such a deep in the money trade, I really couldn't do a whole lot to manage it. It was really just a matter of seeing if we got a little bit of a rebound and then maybe looking to roll it out in time, adding a call against it, which is ultimately what I did. So with that being the most prominent area of concern on Friday, November 5th, I was still trying to look for some quick wins to selfishly boost my ego a little bit and to soften the blow of my other less workable positions like Peloton. So that said, all day, the NASDAQ had kind of looked a little bit weak. It had been weak for both Thursday and Friday, I would say. It really couldn't pick its head up above water too much. And with that, and just maybe it comes with market awareness and recent experience. But my thought was, okay, it's looking a little weak. It's a Friday afternoon. We might see a little bit of a rally here going into the end of the day. So that's why right around 1 o'clock, I think I nibbled on this long sticks position.
So many great points here. First, starting with, it might seem to some people like, why the hell is she talking about Peloton now? It makes total sense because you have this futures, what they present is a diversification model for you. Like if you have stocks in your portfolio that you intend to have for months, even years, you have options trades in your portfolio that you intend to have for weeks or even months, and you're battling those. And futures trades on a 24-hour basis or a 2-day basis or even less than a day, whatever you want here. Most of our futures trades exist for anywhere between 5 minutes and 5 to 10-ish days. That trade type is diversification in its own right, because you're battling these Peloton trades. You're battling, a long stock position in a sector that's underperforming over the course of months or years or what have you. And you can look at opportunities in futures as a way to get some short-term wins. Now, of course, it doesn't always go your way, but another piece that I like that you hit on was the idea that 11.5 is a Friday. That's when you bought the small technology futures, which is 60 technology stocks and is about a quarter the size of micro NASDAQ. So a really nice small technology future to get in there and trade. And the idea that it was down on Thursday and down on Friday was ding, 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 ding to Katie. Stocks don't tend to sell off multiple days in a row. That's why the joke online, buy the dip, is both a joke, but also a successful strategy, because stocks, we've shown this research time and time again, after a down day, after multiple down days, there's a real high probability of a bounce back. And you also, I'm guessing, paired that a little bit with statistics around the market here, because correct me if I'm wrong, but I think that 11.5 day was a day when STIX was down. The STIX is the Swell Technology Futures symbol. That market was down about $1 or more, and you pair that with maybe some of these statistics, and maybe you can speak to kind of the why of the trade. Like, why buy small technology futures on 11.5? What was going on, and what kind of gave you a perceived edge in the market?
Yeah, for sure. So I think we started the day in STIX like right around $68 or so. And then once I started to get into this position, by noon, we were as low as like $67. It's $67.30. So that was when, like you said, that's a whole dollar. So I'm immediately like attracted to this range, as you can see in this bell curve. And like we've hit on in a couple of our other episodes together. So with a 1 point down move and knowing this information, I thought, okay, of course, we know that multi-standard deviation moves can happen. But as you said, seeing that on my platform, on my little watch list, was like, oh, this could be an opportunity, because this is kind of, it's expected, but it's also a relative extreme when we're talking about it from a statistical standpoint.
Yeah, it's always a balance of, yes, this can happen, but also, are we at a place where I have some edge? Because if you wait so long on that first piece of like, oh, this is something that's never happened, you're never going to get any kind of edge, because you'll never trade. And so that's why we use these standard deviations. And that's what Katie was thinking here, is like, okay, the standard deviation is around $1. It's down $1. I'm going to look to buy it. And my edge is that the market tends to be not down $1 68% of the time. That's my edge here. And I want to look at the daily action on that day, because a couple of things are interesting to me here. As you can see with the y-axis, the market started the day, like Katie said, above 68, got all the way down to 67. That's that dollar move that we look for in a lot of the small exchange products, but STIX here in particular. One, how did you choose this price in terms of like, if there's a bid, at 67.5, 67.50, and there's an offer at 67.53 or 54, where do you put your bid in? And two, the market moved through you. How do you deal with that emotionally? Because I think it may seem simple, but a lot of people get caught up in like, okay, I've got the price action, I've got the product, I've got the price action, and now I know that I want to buy it, but how do I choose this price? And how do I feel if the market moves through me by 20 cents, 30 cents, or if the market moves through me by even more?
Right. Yeah, no, a great point. And it really kind of, for the first point, whether you have a tiny bit of a slightly wider bid ask spread, I am absolutely, a cancel replace queen. That would be like my t-shirt slogan.
I like it.
So
I like that a lot.
I do nibble by pennies. So if I can't get filled right away, and I think Nick and Tony talk about this quite a bit, is do you want the penny or do you want the position? So I had a relative 5-cent range, let's just call it, of where I was comfortable, like, maybe giving up 1 or 2 pennies in order to actually get that position on, because my assumption was strong enough to warrant it. So I definitely would say that I just kind of cancel, replace, and move my order. But if it really starts moving, more than 5 cents against me, 10 cents against me, I'm just like, you know what, like, keep looking, keep an eye on it for the rest of the day, see if we can kind of get a little bit more action back. So as far as, withstanding more of a downside when I, stepped in front of it, I guess you'd want to say, it kind of goes back to that bell curve we talked about, where we still know that it's not impossible for things to continue in a downward trajectory, even if you've had multiple down days. So I definitely was willing to withstand that. I wouldn't necessarily be right away. And I also think it goes back to the idea of just having a game plan. So we talk about ranges, we talk about expected moves over a certain amount of days, which is that other like cone that you guys put in your newsletter that I love so much. So I also use that to build my expectations around P&L. So in that particular instance as well, I was like, okay, a home run here would be if I was able to make $100 on this. I'm willing to make less if I'm correct, but I also need to be willing to lose $100 as well.
Yeah, a bunch of great pieces there. And you kind of, as you trade your first futures contract and you trade, a couple more, you really develop these mechanics for yourself. But I think Katie presents a really, really strong set of mechanics, which is to say that like the market's at 67.50 and maybe the bid is 67.50, the offer is 67.52 or 53, and I want to buy. So I'll put my bid in maybe at 67.50 or 67.51 or wherever. Yeah. And if it sits there and the market just kind of trades around but doesn't fill my order, I'll maybe move that up 1 to 5 ticks. I think that's actually pretty solid there. But where it gets away from you is if the market bounces back, maybe you put in that order at 67.50, you didn't get hit, and now the bid is up at 67.60, 67.70. You don't want to go chasing more than 5-ish cents because you're giving away like if I'm expecting $1 and I give away 10 cents, that's right. 10% of what you expected there. So great piece there. And then also with the downside action as well, I'm always looking to I'm comfortable with giving up as much as I was willing to take. Which is to say, if I bought that 67.50 or 67.52, whatever, I walked it up a little bit, and the market gets down to 67.40 or 30 or 20, I'm chilling because I was looking for 50 cents or $1. Now, if the market gets down to 66.50 or 66.25, that's when it's like, all right, we're in real outlier range here, and I'm going to get out for a loss and move on. I mean, does that all make sense to you? I mean, that's your thinking, I'm guessing, right?
Yeah, exactly. And I think too, especially for somebody that's new, is of course everybody wants to paint the bottom. They want to buy at the lowest of the lows and they want to sell at the highest of the highs. Like in a dream world, if I took the limitless pill, that's what I would want to do. But that's not, we live in an imperfect world. So you kind of have to be willing to withstand, a little bit of heat in order to kind of let the position play out and give yourself a little bit of time to be right. It's not instantly going to gratify you, I guess, is what I would say. And it would be great if that was the case, but it's not. So you do need to kind of develop a tolerance for withstanding a little bit of a loss if you're not correct right away. But identifying those opportunities where you're like, really not correct because it's statistically in outlier territory.
Exactly right. Like this isn't to say like, hey, everybody out there should be lifting offers all the time. Get the trade done immediately. No, not saying that, but yeah, you're exactly right that like if there is some kind of sixth sense of satisfaction when you are the low print, when it's like I bought the 67.50 and that was the low for the day. Yes, that's very nice, but that's going to happen 1 in 20 times. And then if that's the only way you trade, you missed out on 19 trades. And so like, it's really not worthwhile to kind of have that be your end all be all because the market you used that edge, Katie, the market did bounce back. You bought like the down there near 67 and on Monday, the following week there, and you've really kind of carved out a niche for yourself as being the personality that I know of at least who does futures trading in like not a day trading sense, but you're really good at like the 24 to 72 hour futures trades. And it was 11.5, you buy it, 11.8 the following Monday, you're selling for a nice $1 profit. I mean, what made you decide on that exit? And then again, when you see the market has bounced back in your favor, is putting in an offer the same process as putting in a bid?
Oh, yeah, so a couple of things there. Definitely the same thing as putting in a bid where I will chase it by a couple pennies. So that's an easy answer. As far as identifying that it was a profit that was sufficient enough for me to take it off, of course, the Peloton incident, as I'll just call it. I don't know what else to call it.
It sounds
was
like you
still-
somehow got into a bicycle crash on a Peloton.
Yeah, like on
We call
a
it
stable bike. The Peloton incident was still, of course, top of mind for me. So I was just, again, looking for quick wins, a little bit of an ego boost, if that's what it is. Selfishly, I know that as traders, we try to be as mechanical as possible. So I was trying to do the mechanical thing by covering profits while also giving myself a little pat on the back that I'm not the worst trader alive. So, I mean, I think it's worth mentioning that, like, there is an element of emotion that goes along with trading. And then the last piece of it, going back to our very early conversation during this call, Monday was actually my birthday. So I wasn't by my computer. I took like half of a day off. So I wanted to cover it before I left for the rest of the day too.
Unbelievable.
So it's a little bit of time management and consideration there as well.
Half of a day off you took for your birthday. What a jerk. You can't take, have you talked to Tom about that? I'm sure he was very angry that you took any hours off. Well, first of all, happy belated birthday. And yeah, I think you present actually something that's really, really cool. And I think makes a lot of sense, especially to anyone who's ever played or watched baseball before. Like if you go 0 for 12 or you have a really bad at bat, like you did with this Peloton trade, the next time up, it's not like, all right, I'm going to go hit a home run and I'm going to be back.
Right.
That's not going to work. You choke up and you hit a couple singles. And that's honestly what futures are here for. Like, I think in the past, one of the worst parts of futures was like people who did want to step up and hit a home run and inevitably lost thousands of dollars. But these are really great products here to go out there and hit some singles, hit some $50 trades, some $100 trades. And yeah, I mean, at the end of the day, you consciously or subconsciously, Katie, took a profit at a point that was kind of the daily range in this market. And so you were like, oh, this is reasonable for a 24-hour-ish trade in small technology. And so I took it off for a $50 to $100 gainer. I think that's a really cool, like, even if you're not losing in other areas, these small futures trades do kind of, especially when you have some edge on your side with the statistics that we give out to our community members, and you can be a community member at community.thesmallexchange.com. Yeah, there's the plug.
Finger guns.
Even if you aren't, dealing with losing trades and options or somewhere else, building that confidence is huge. And so hopefully you can use the stats from that community members get from our exclusive newsletter to them, and they get even greater edge with the reduced fees. Join community today. But it's also just like building that confidence, being a high average batter, that permeates all your different trading. And I think you've really made a living in the futures world, at least off of those, like I say, 24 to 72 hour trades that have a high probability of profit. And you're not looking to make $5,000. You're looking to make 50 to $100. That's really cool.
Thanks. Yeah, no, I mean, and I think the theme here is that, like, of course it takes time to build this type of know-how. And I don't claim to be somebody that hits a single every time and has an 1,000 batting average. You got to take the wins with the losses with the wins, I should say. But this one did end up working out. That was kind of what was on my mind as I was considering entering and exiting the position. And hopefully it gives you guys a little bit more insight into my mind, I guess.
Yeah, that's great. Because everybody to check out Katie, like I say, on Twitter and on the Tastyworks follow page, because you're great about posting these things, and I'm hopefully about to be great about posting these things. Thanks to Katie, I'm about to get back on that follow page here.
Yeah.
But a lot of times people do want that extra insight of like, oh, you bought this thing and sold it for a profit, but what the hell was going on there, so that I can feel confident doing it myself. So thank you for giving us a little bit of a sneak peek into your wonderful Scorpio brain, Katie. You're a fantastic guest here on the show every Wednesday. Thanks for jumping on. Anything to
Well, you're
plug?
a wonderful
Aries
host.
Wonderful Aries host. I'll take it. That's the best compliment I'm going to get. But everybody else, stick around. Thanks so much, Katie, for joining us. Thanks, everybody, for watching. Splash into Futures is coming up next. Weird markets still. Equities, make up your mind and move one way or the other. Pete Momat and I will talk about all of the asset classes. So stick around, Splash into Futures. Thanks for everybody for watching. Bye.
Bye, guys.